average investor makes 3.5%. Why is that? It's because they're doing the wrong thing. The right thing for you to do is to take advantage of what Warren Buffett's saying. Take advantage of our 5% rule. When everybody goes right, I go left. He is the contrarian from an investment standpoint. No one sells at the very, very tippy top, and nobody buys at the very, very bottom. It's always somewhere in between. But for my clients, last week, we sold 5% out the market.
And you just wanna get paid, tired of making no money mistakes. Make a payment on your bills and you still late, yeah. Paying for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, paying for profits to help you seek change, yeah. Cut the show on, just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you knowing it could be different.
Did the Oracle of Omaha do it again? Did he just let us know that the market might be falling? Or did he give us an opportunity that we got to take advantage of? I don't know. I know one thing. Warren Buffett came out and said, hey, the market, I'm not investing right now. It's too overbought. We're at all-time highs, and he thinks it's going to go higher. Is that a good thing or a bad thing? We're going to go over his mutual fund in particular, how much is made over time right now, why it's falling like crazy, and if this is an investment opportunity or something we should bypass as he gets ready for retirement. Before we get started, as always, like, subscribe, and share to our channel. Real life, I'm a certified financial planner. Let's help thousands of people across this beautiful country, but on these social media airways, we'll just give it information, not a recommendation, but hopefully this information and the research you will do will transform your finances forever. Y'all ready to talk about the Oracle? Warren Buffett, Lego. Now, Warren Buffett is the Oracle of Omaha, the Wizard of Wall Street, because his fund, BRK.B, Class A, need a lot of money to invest in that, my friends, or Class B, which is the most common ETF on the market. My friends, from 1965 to the end of 2024, it doubled the stock market. Over this time frame, it made 19%. On $100,000, I made $19,000 a year. The stock market at the same time made about 10%. Double the stock market. And he basically had one rule. When everybody goes right, I go left. It's the herd mentality, and he always did opposite. He is the contrarian from an investment standpoint. Also, what he did as well, he bought a lot of preferred stock. A preferred stock is, I buy stock in a company, but it gives me a nice hefty dividend. So if the stock is maybe doing as good as the market, if you include the large dividend that I get, I'm outperforming the market. And by doing those two things, he ran it up, buying low, selling high. And he said, as we hit all-time highs, he thinks that the market is overbought. So what does that mean, my friends? FOMO, fear of missing out, as more people pile in, they get into the craze? Or does it mean that a crash is coming? Well, let's look at the numbers. Let's look at his fund and see why what they're doing with their fund now might be an indication of the future. Now, as we look at the chart, as we see the climb up for Warren Buffett, right? 21, 200. Is it just me? Or is that you're working hard, but you're not seeing the financial results that you want? We're clocking in, we're clocking out, we have the income, we're making the money, but our wealth is not growing like we want it to. Well, my friends, it's not your fault. You know why? Because we're never taught how money works. We're taught how to spend it, but we're not taught how to leverage the money that we're making right now to build wealth. Now, wealth, it comes in all different shapes and sizes. The question is, how much wealth do you want for you and your family? But the best part about it is help us on the way. Join us during our 5-day mentorship, where you learn how to structure your money, reduce your tax liability, increase your net worth, and build wealth. We'll show you how to go from a wealth builder to a wealth strategist to a wealth creator, and leaving that long-lasting legacy to your family. Click the link below and join us on our 5-day mentorship, where we'll help you accelerate your wealth. Now back to the episode. $89 a share, and that thing climbed up basically more than almost double, right? But at $468, he hit his peak March 12th, 2025, in the midst of the tariffs. Think about that. Tariffs, all the tariffs, the market was going down. He was going up because of those preferred stocks. 524, and now he's down to 468. Basically 20% drop, right? Over the past year, down by 10%. When was the last time Warren Buffett, the Oracle of Omaha, the Wizard of Wall Street, went down by 20%? Long time. We all remember this, right? Interest rate crazy. The interest rates of 2022, when the market from top to bottom, NASDAQ at least, and Russell went down by almost 40%. He went from 468 to a miserable 287. But look at that. Boop. And everybody was selling and he was buying into it. Right now, he's selling into it. Happened again. We all know COVID, right? 7 to 173, he bought in. And then also 2008, remember the crash, $90 a share, down to 46. But look after that. Warren Buffett just said that he would not buy anything right now because he thinks the market's overpriced. Looking at this chart, do you think he has a great track record of being right or a wrong track record? We might have 1, 2, 3, 4 good years, but he's had decades of outperforming, doubling the stock market. My friends, this is why we love this 5% strategy. You ask, what's that 5% strategy? Not a recommendation, but information. What we do for our clients, very, very simple. Market hits an all-time high, we're always selling 5%. Not daily, but weekly. If that week hit an all-time high, we're going to skim off the top. NASDAQ hit an all-time high, we're selling 5%. The following week, NASDAQ hit an all-time high, we're selling 5%. The reason why is because we are slowly but surely selling high. Are you like the 83% of Americans who want to get a trust, who want to get a will, want to get a power of attorney, but you don't have one? Well, you are not alone because 22% of Americans have one. That means 1 out of every 4 families have a trust, a will, and a power of attorney. Which bracket are you in? 1 out of 4 or 3 out of 4? It's okay because we have the Relax Estate, a fully automated AI platform that allows you to create a trust, a will, and a power of attorney all at the fingertips. And if you are an insurance agent, tax professional, financial advisor, notary, or in any business profession, you can even white label this to your clients. You grow your business, you help your clients, everybody wins. Visit our website, www.therelaxestate.com. Right here, therelaxestate.com, and you can create a trust for your family, or if you're a business owner, want to use it to scale your business and help your clients, you can do that as well. Now back to this wonderful episode. Now historically, the S&P 500 hits an all-time high in between 17 to 20 times a year. So it's very, very frequently. So that means about 8% of the time, the market's going to hit an all-time high. But if we continue to do 5%, it's not like we do 5% 20 times you get out the market. No, it's 5% from the top. So you always have skin in the game. But also historically, the market goes down 5% twice throughout the year. If the bear strategy, right? Also, we know historically, once every 10 months, the market goes down by 10%. So if we're putting the money back that we sold high, some in when it's down by 5%, one when it's down by 10%, and then that once every 15 months over the past 5 years, one time a year, because the market is way more volatile now because of information and technology, we're able to then buy things at a low price when the market hits that bear market territory of 20%. Doing those things, my friends, gives us a huge advantage because we're always selling high and buying low. Most individuals do opposite. They see the market hits all-time highs, they're going to miss out on something crazy, and they go in. The market might teeter up, but then it goes down. And as it's going down more by more, you're like, I can't take it anymore. Let me sell it. And then that cycle goes all over again because you don't buy till it gets back to where it was at an all-time high. That's why the average of the stock market is 9%. But according to JP Morgan, the average investor makes 3.5%. Why is that? They all invest in the stock market. It's because they're doing the wrong thing. The right thing for you to do is to take advantage of what Warren Buffett's saying. Take advantage of our 5% rule. Now, does that mean that you're going to be right all the time? No, because it might go up a little bit higher. You're going to sell more. No one sells at the very, very tippy top, and nobody buys at the very, very bottom. It's always somewhere in between. But for my clients, last week, we sold 5% out the market. The week before, when the NASDAQ hit an all-time high, we sold 5%. Prayerfully hits another all-time high this week, and we're going to sell 5%. We're just taking little bits and pieces off the top, and as the market goes down, we buy back. That strategy, the cliff, dip, bear strategy, gives you over a 2-year time period 23%. Join us in our school community as we have modules, classes, courses to go from a taxpayer to a wealth builder. How to use our cliff, dip, bear strategy to do better with your investments. How to acquire businesses and how to use your retirement plan to grow and not pay taxes. What? I can have a retirement plan grow and not pay taxes? Yes, your IRA or even your 401k at your employer. This and other things we focus on in our school community, the Relax Investor. And guess what? You get 7 days free access, and you get our weekly coaching calls every Wednesday. You and hundreds of people ask questions to 6, 7, 8, and even 9-figure business owners that tell you how they created their business, how they run their business, and how their finances is as smooth as it can be. So click the link below and join us in our Relax Investor Academy to help you scale your finances. If the stock just gets back to where it was after being down by 20. Past performance does not guarantee future results. But if you want a safer, not safe, but if you want a safer way to be in the market, have some skin in the game, but also have a strategy that you can always put into any stock that you buy, it doesn't get any easier or any better than the cliff, dip, bear strategy. And Warren Buffett, he's saying he ain't putting no new money in the market. He's the Wizard of Wall Street, so why should you? It is some stocks out there that are down. Some stocks that are down dramatically. Those might be stocks that take advantage of where they're down. But my friends, just be careful getting to the market right now. Things are great, but we need to wait, hesitate, in this case, procrastinate when it comes into putting that large lump sum of money in the market because there's an all-time high. What do you guys think, though? Is a Wizard of Wall Street correct? The Oracle of Omaha, should we pause, get into the market? Should we use my strategy and sell 5% off the top? Or should we keep on going in because it's going to go up like crazy? Let me know in the comments. Thank you so much. We have over 100,000 followers on YouTube. I couldn't do it without you guys, you gals, everybody. Comment below, like, subscribe, share. And again, thank you for all your support. It is greatly, greatly, greatly appreciated. Love is love, y'all. Let's make some painful profits together. Peace.